All right, today is Saturday, February 27th, 2021, and it's almost the end of the month, so it's a good time as any to do a portfolio review. The last time I did this was at the end of August, so it's been a good 6 months. And it was actually the end of August leading into September, and at the time I had sold a lot of my winners in my portfolio and was sitting on something like 40% cash. And I think that, a lot of people gave me a lot of slack about it because it's a rather large cash position. I don't deny it at all. But it's been a good 6 months, so let's see what's going on and how the portfolio is doing. So year to date, 2 months in, I'm up about 7.5% in the portfolio. I've reduced my cash holdings down to about 22%. But I still am holding quite a big chunk in cash. So going from 40 to 22%, what have I done? So a big part of that is investing in energy stock back in early October. So I was looking at energy stock, which was really taking a beating because of COVID and everything else. People weren't traveling, they weren't driving as much, they didn't have to go to work, and they were just getting the hell beat out of them. And when I looked at it, it felt like it was a great value play, so I moved in and have done really well with energy stocks. Based on the cost that I was paying, I'm also getting a great dividend yield on cost. I think if you were to buy now, the yield is down to somewhere around 5%, which is more along historical lines, but when I was buying it was like 8 or 9%. So it's been a great play for me. The other thing that I did was I bought some tobacco stock. This was more recent, but when I was looking at tobacco stock, my thinking is that this is kind of, consumer staples. It's somewhat cyclical, and it was also getting really beaten down. And you can buy tobacco stocks for PEs of, 8 or 9 with yields that are in the 8 to 9%. And given the environment that we're in terms of growth stocks and, the asset bubble inflating, I just thought that this was a sector that could be a good play for the next year or so. So that's where most of my money has gone in terms of, reducing that cash allocation from 40% down to 22%. So what does it look like now? Well, I still have a rather large cash position at 22%, but my technology holding has been stable. Part of that is that I wasn't able to really get out of Microsoft due to not getting permission to trade. It's fine if I've been trying to get out of it for the last 6 months. And if I was able to get out of it, I would have sold at the high, right? Because it's gone down a little bit more since then. But it's not something I'm gonna lose sleep over. I just thought that if I could reduce that position by, say, half, I wouldn't sell all of it, but if I could sell half, I would have better opportunities to redeploy the cash. But as it is, I still have 15% of my portfolio in Microsoft, and I'm not really worried about it. Like I said, consumer staples is the next large category for me, 19%, and then energy at 26% from those bet. I still have quite a bit in healthcare, 8%, and then the rest of it is REIT and others. So I have about 6% in REITs, and then I have 4% in other. I'm not going to talk about individual holdings. I mean, I've already mentioned Microsoft and my tobacco stock, but I'm going to show them on the video here so you can see where I'm holding the individual securities as well. And in the accompanying blog article, I'll go into a little bit more detail about what I'm thinking. So compared to, say, the S&P 500, for the first 2 months of the year, I've done, 3 times as well. So I'm really happy about it. When you're getting 7.5% compared to 1.5%, it's something to celebrate for sure. So am I doing that math right? It's 5 times better or 4 times better. But in any case, it's a great return so far. The last week in February has been very volatile, and there have been a lot of move to the downside in a lot of these issues because I think that prices were high. So my reasoning back in August, September to hold such a large cash position was that I felt stocks were just crazy high. And even going into 21, I felt it was still crazy high. And I was comfortable holding such a large cash position because I thought that there could be opportunities that would be coming up in the short term to redeploy that cash into better investments. A lot of people say that I'm market timing. Yeah, I am. But, I don't feel bad about it because there's a part of it that was a rebalancing for me because my portfolio before this point in time was getting so out of whack with things like Apple and other tech stocks that had gone up tremendously. I wasn't really feeling comfortable. I was a lot more comfortable having this large cash position, and it seemed to have paid off with my bets in energy especially. We'll see what happens with the tobacco play, but even with those bets in energy and tobacco, I'm still holding about 22% cash to redeploy once we see what this current volatility is going to do. So personally, I think that there's still some time for consolidation, and opportunities will come up that I will need to have a cash position to take advantage of. But for now, I'm going to hold what I have and kind of watch from the sidelines and see how we do for the rest of the year. But 2 months in, really can't complain. So that's the portfolio update for the first 2 months of 2021. Hope you enjoy. Later.